Picture this. As a director of a company, one of your employees visits you in the office and requests you to give them a loan facility of 1.5 million. The reason? They have a sick parent and they are struggling to pay the hospital bills for this particular parent. As a company director and as a person who wants to care for the employees of the company, you decide to give him a loan of 1.5 million. But this time round, because you assume he's one of the staff members of the company, you decide not to charge them any interest on that loan. What appears as a very good gesture, as a supportive and considerate move, could end up making you pay a whooping taxes and penalty fines and interest, because KRA does not consider anything to be free. Most companies have made this mistake of giving interest loans to their staff members, and KRA is not happy with that, and eventually it issues additional tax assessments to these companies, and of course they end up paying heavily for not complying with the law. So what does the law say about such cases? There's something called fringe benefit tax. Fringe benefit tax is a tax that is imposed on any benefit that an employee receives from the company. So, for instance, in such a case, an employee receives a loan facility of 1.5 million to be repaid to the company within a period of 1 year. But the company has charged 0 interest. But KRA now wants to know if this person would have gone to a commercial bank, to a normal financial institution, what interest would they have been charged by KCB, by Equity, by ABSA? Now, that's what the KRA is interested with. Right now, prescribed market interest rates for purposes of computing the benefit that an employee has received from a company whenever they get a loan is 8%. KRA issues that tax rate every other 3 months. For now, the tax rate that is being used for the month of October, November, and December for computing what an employee should be charged for the loan they have received for free or at a lower interest rate from their company is 8%. Now, this employee has received a loan of 1.5 million and they are supposed to pay within 1 year. Reason? They have a sick parent. So KRA now comes and says 1.5 million, what is the interest amount for a whole year based on 8%? 8% of 1.5 million is 120,000. So wants to consider that for that year you have benefited, you have received a taxable benefit from your employer of 120,000. And you will pay taxes for this amount of money. Yes, the loan was provided for free by your good, reasonable, understanding employer. But for KRA, there's nothing for free. So your employer is supposed to consider that 120,000. It is the interest expense for a whole year. So, but now pay as you earn is filed and is payable on a monthly basis. Every employee, the salary that you get paid, as long as you receive more than 24,000, as long as you are paid more than 24,000 per month, you are supposed to be deducted some amount of money with reference to pay as you earn, and this is remitted to KRA by 9th of every month. So let's assume your salary is a salary of 100,000 per month. That is the normal salary that you get from your company. Remember, for this particular year, you have benefited from a loan of 1.5 million, which is free of charge. you are not being charged any interest by your company. But KRA understands that you are supposed to pay 8% of that amount of taxable benefit to KRA. So we said 8% of 1.5 million is 120,000. So 120,000 divided by 12 to make it a monthly amount. You get it is 10,000. So this 10,000 is what KRA is considering as your additional benefit from your company. So now, remember, you are earning 100,000 per month. So add the 10,000 that you should have paid to a financial institution if you had borrowed 1.5 million from such a commercial bank. So your taxable benefit is the 100,000 that you normally earn plus the 10,000 as fringe benefit from the loan facility. So your taxes will be charged or computed based on 110,000 for the next 12 months as long as that loan amount is there. So many companies forget to do this, and what they receive at the end of the day are penalties, fines, and interest. If a company forgets to include this taxable benefit when computing the payroll for the employee, they risk a penalty of not filing of 25% of the amount that they have failed to disclose. In this case, it is 120,000, which is 10,000, 120,000 per year, which is 10,000 per month. So if you are the employer and you had given such a facility to your employee, every month that you don't file that extra benefit that is accruing to your employee of 10,000, KRA is giving you or imposing a penalty of 25% of that 10,000 on you for late filing. So there is a penalty for late filing that is 25% of the taxes that have not been filed, in this case 10,000. Then there is a late payment penalty. Late payment penalty is 5%, the amount that you should have paid by 9th of the month, but you delayed paying. So there's another penalty of 5%. And there is another penalty, but now this one is interest of 1% on a monthly basis of the amount that continues to be outstanding as a debt from you to KRA. So there is 25% for late filing, there is 5% for late payment, and there is 1% interest every other time this amount continues to remain unpaid by you. Now, something that you are doing in good faith, something that you are doing on a humanitarian ground, ends up being a huge cost to the company that can expose the company to additional tax assessments, to audit investigations. But for why? For what reason? So now, as a director, as a shareholder, as an owner, or as a finance manager, always know this. To avoid huge and painful penalties coming from KRA, always assess all the employees' benefits that your employees are receiving and enjoying. Check whether there is one that constitutes a fringe and a taxable benefit, like the loan facility, where you have given a loan facility with zero interest, but KRA requires you to charge interest at a prescribed rate. Currently, it is at 8%. If you realize there is a taxable benefit, include it when filing payroll returns for such an employee. And by the way, there are those accountants that they consider this loan amount that has been extended to one of the employees as a company expense. So when they are computing for corporate taxes, the amount of taxes, income tax that the company should pay, you start with revenues, then you deduct all expenses so that you can arrive at the taxable profit. They deduct that loan amount that was given to an employee as if it is a taxable expense. That is wrong, because when you do that, you are exaggerating the expenses of the company. And by doing so, you are reducing the taxable profits of this company. And when KRA realizes this, what they will do is they will disallow that expense that you had deducted by mistake. They add it back to the taxable profits. They recompute the taxes payable by your company, and they penalize you with penalties, fines, and interest. So be very careful. The loan amount that you have extended to one of your employees, that is not a taxable deduction. Remember, this employee will pay this amount of money. It is a loan, it is not an expense. And furthermore, the only expense that you should consider is the interest expense, the one that we have just discussed, about 8%. But the loan, leave it alone. Now that is very clear. As an accountant, always ensure that the rules of KRA, that you declare any fringe benefit that is accruing to any of the employee, and you proceed to deduct. Because failure to do that will haunt your company in terms of penalties and interest. Always know that fringe benefits is a benefit that is taxable. If at all you want to help this employee at your personal capacity, then you and the company are two different things. If you decide to give 1.5, if you decide to give a donation to this employee whose family member is sick, at your personal capacity, that will not be considered as a taxable benefit on the employee. But if it is the company that is paying, making a donation or making a contribution, and it is the company, then that amount of money has to be charged as a benefit from the employee. So it's always good to differentiate that you as a director, your personal money, and the money for the company. If you give money as a person at your individual capacity, that's a totally different story from when it is your company that is giving a facility to one of your employees. So always ensure to do the right thing so that you can protect your business, you can protect your profits, and more importantly, you can protect the peace of your mind.